Have you ever wondered why 90% of traders fail, even though they have access to the exact same charts, indicators, and news as the professionals on Wall Street? It's a frustrating cycle, but the truth is, the market does not reward what you think it rewards. Today, we're going to step away from the flashing lights of modern finance and look back at a 2,500-year-old edge that most traders completely ignore. You're about to discover why the secret to mastery isn't about working harder. It's about changing your entire philosophy of movement. Now, this brings us to a key point, the hustle culture trap. We've been raised to believe that more effort equals more results. In a typical 9-to-5 job, grinding for 12 hours might get you a promotion, but in the world of trading, this mentality will absolutely destroy you. You see, the market doesn't pay by the hour. It rewards precision, not struggle. If you're spending 12-hour days staring at 50 different indicators, you aren't gaining clarity. You're falling into the professional fallacy. You might be wondering what that struggle actually looks like on a screen. I call it rainbow chart syndrome. Look at this chart. You've got Fibonacci lines, RSI, MACD, and moving averages all screaming different things at once. This is the recipe for analysis paralysis. When your indicators conflict, you either freeze up and miss the move, or you gamble out of frustration. This is exactly how a $5,000 account drains down to $1,800 in just 3 months. So what is the cure? It's an ancient Chinese concept called Wu Wei, or effortless action. It's the art of aligning yourself with the natural flow of the market rather than fighting against it. Think of it this way: don't force the trade. Don't fight the trend. Instead, wait for the river of the market to carry you to your destination. To achieve this, we need to embrace the concept of PU, or the uncarved block. In trading, simplicity equals clarity. If you look at a master trader's chart, it's actually quite boring. Your goal is to strip away the noise. If an indicator adds confusion rather than clarity, delete it. Your job is to find the essence of price. Let's look at a real-world case study using the pound sterling to US dollar London session. The old way involves staring at the screen for 3 hours, forcing a mediocre trade out of boredom, getting stressed, and ultimately taking a loss. Now, look at the Wu Wei way. You check the chart, see nothing is there, and you walk away. You go to the gym, have breakfast, and return only when the market conditions are right. You wait for the market to come to you, leading to a perfect entry and profit. This leads us to our first pillar, patience over action. There's an old saying, a patient person rides a donkey while looking for a horse. This means taking what is available, even if that's just staying in cash while waiting for that A+ setup. Remember, being comfortable in cash is a position. FOMO is fear-based trading. True patience is power-based trading. The market is open 24 hours a day, 5 days a week. Missing one trade means absolutely nothing. Our second pillar is the observer mind. You cannot stop your emotions, but you can choose not to be controlled by them. We create a gap between the stimulus of the market and our response. When fear screams, "Get out!" you observe that fear, but you trust your stop loss. When greed screams, "Add more!" you observe the greed, but you take your profit exactly as planned. The third pillar is trust in the process, illustrated by the farmer parable. When a horse runs away, is it bad luck? Maybe. When it returns with wild horses, is it good luck? Maybe. The lesson for us is that you cannot judge the quality of a trading system based on a single event. Don't judge the outcome of one trade. Judge the process over 100 trades. Let's get real about the math. Even a winning system with a 55% win rate will have losing streaks. Most traders quit during what I call the danger zone. That string of losses where they think the system has failed. But if your setups were valid, the system didn't fail, probability just played out. You have to stick to your edge to see the account balance eventually curve upward. So, which trader are you? The hustler with the Western mindset is reactive, anxious, and uses cluttered charts. They hop from system to system because they fear missing out. The Wu Wei trader has Eastern discipline. They are proactive, calm, and use simple charts. They trust the process and, most importantly, they fear forcing a trade more than they fear missing one. Now, let's put this into action. Step 1 is a chart audit. Look at your charts right now. If you have more than 3 indicators, you are overcomplicating things. Strip it down. Remove the noise and embrace that uncarved block we talked about earlier. Simplicity will give you the clarity you've been missing. Step 2 is a commitment to the no forced trades rule. Before you ever hit that buy or sell button, ask yourself, this meets all my criteria, and I would take this trade even if I had already made money today. If you can't say that honestly, do not take the trade. That is the essence of Wu Wei. Finally, step 3 is emotional journaling and the 100 trade rule. Don't just track pips. Track your feelings. Did you feel greed at plus 20? Did you feel fear when price dropped? Commit to one single edge for 100 trades. You need that sample size of 100 to actually see your probability play out. Not 10, not 20, 100. We'll leave you with this final thought. Discipline isn't about working harder. It's about waiting harder. It's the ability to do nothing until doing something is the only obvious choice. Stop hunting. Stop forcing. Let the market come to you. Thanks for watching. If this resonated with you, you're exactly who we built this for. Subscribe for more content that goes beyond the charts. Join our Discord to connect with traders focused on building their core. And remember, let the market come to you.